Hello everybody, welcome to the Trading with Ashley show. I'm excited to bring this video to you because it's something different. It's not just selling puts, and it works very well for smaller accounts. So I've been helping my adult children learn how to trade, and I use this exact strategy to help them. So I thought I would bring it to you so that you could use this strategy and at least study up on this strategy. Now it's going to be perfect when we actually have a pullback in the market. A lot of our favorite stocks that would qualify for this strategy, they're riding high right now, so this would not be the time to employ this strategy. But if you want to learn it now and then practice, maybe paper trade these type strategies, so that if we get that eventual pullback that we're thinking we might get in the fall, you could use a lot of these to have a really good gain. With this strategy, I will show you how to take a quality stock that has sound business principles and look at levels of support. Then when we're ready, when the stock pulls back to that level of support, we pivot to the 2 times leveraged counterpart. And by doing that, instead of getting $1 for every dollar the stock rises, you actually get $2, but it doesn't come without risk. The risk of trading leveraged ETFs are this. One, it's leveraged. So with that, there are management fees. Those management fees eat away at these leveraged ETFs over time. The second thing is that on leveraged ETFs, there's a nightly reset of the price. That's why the longer you hold these, the less it actually tracks its older sister counterpart. Then, when you consider the fact that if we have a stock that takes a dramatic dive well below where we thought it would, these leveraged counterparts, well, it's going to go down twice as fast. So that's the risk. It's harder to make money on these if the stock plunges suddenly. So be careful with that. These are not meant for buy and holds. They're best if you're swing trading very short trades, maybe 1 or 2 weeks max. Or if you decide to sell puts on them, that's okay too. But I just go super low when I sell puts because it does erode over time. So you have to factor that into the equation. But basically the way it works is this. We are going to take quality companies. It's usually the Mag 7. You have some other stocks like Pltr and Robinhood. Another thing is when these pull back, you like to see that buyers actually step in, and that helps ensure that your trade won't work against you. Let's go into the computer. I'm going to show you how to evaluate the trade, how to set up the trade, and then how to execute the trade. We're going to look at a few of these together just to get started. And so the first one is Nvda. At the time of recording, Nvda is trading a little bit high. It's at 181 right now, and the RSI is over 50. It's at 65. We're looking at the 3-month chart. Now, when this works best is when this comes down to a level of support. So with Nvda, if we get a more dramatic pullback, then you'd want to look at something closer to the bottom of this band to then go and buy the leveraged counterpart. You could also use this moving average right here. It's a popular one. It's the 50-day moving average as an area of good support to go and buy the leveraged counterpart. So now that you have a sense for when you'd want to go do this, let's go take a look at how this leveraged counterpart, how it tracks with Nvda itself. To do this part, you want to go to Google Finance. They have a great site where you can pull in the comparison on different plays. So right now I'm looking at Nvda and I'm looking at the 1-day comparison. And this is a 2-time leveraged ETF. You're looking at NVDL is what I'm looking at. And you can see here when Nvda fell 0.81%, it fell 1.75%. And you can also see it visually right here. Now, it does track pretty well as you go over the period of about 1 month. It starts to get a little bit out of whack once you start getting further out to 6 months, year to date, and then a year. You can see that it's not an exact match. In fact, it's skewed. So that's why you want to go ahead and ensure that you're not holding on to any of these plays too long. Let's go look at another one together. Next, we're going to look at Robinhood. As of today, it's at 108. We had a bit of a pullback today. It was rather dramatic. It was closer to almost 5%, and we're approaching the middle of the band. So there's a potential play right here, but if you want really the best entry, I think you would want to wait until it pulls down right there around that 98. Anything under 100 with Robinhood should get bought up rather quickly because there's so much on the horizon. So with that being said, let's go take a look at how it compares against its counterpart, which would be ROBN. Again, when we're looking at just a 1-day chart, it's pretty comparable with double the drop. And then you expand to 5 days And here we are looking at a month, and things are starting to get a little bit out of whack once you get to the 6-month mark. And so that'll give you a good understanding of how this works. But when the time is right and you do see Robinhood pull back to that level, that's when I would go and buy a little bit of ROBN. And as far as when to sell it, if you're assigned the shares when Robinhood is trading down here, then once you get up to maybe about the middle of the band right here, that would be a good time to go ahead and swing trade your play and sell it. If you wanted to sell half of your position that you purchased right here when the mother stock gets to the middle of the band, then hold on to a few shares for maybe it to ride up the complete band. And then that would be a significant jump in your leveraged counterpart if you ended up doing it that way. If you bought down low, you bought ROBN when Robinhood was down here, you sold about half or 3/4 of your position half the way up, and then hold on to the very last bit, maybe the last fourth of it, and then sell it when it gets to the top. That would be a real good way to stagger out of your position in a swing trade. Finally, let's look at Pltr. Now, this one's tough because there have been a lot of students that have been selling aggressive puts to try to put these shares, and it seems to just escape them all the time. And so let's look at this one. Currently, we are over 70 on the RSI, and even though we had a little bit of a pullback today, it wasn't very deep. And so if you see Palantir pull back to the middle of its Bollinger Band, anything around that 165 mark, that would be a good first opportunity, especially since you see this gap right here. Once that gets filled, it could be off to the races again. So look to see if we can get a pullback to the 20-day moving average, and then that might be a really good time to go look at the leveraged counterpart. Here's Palantir, and the leveraged counterpart that I like to use is PTIR. It recently went through a 15-to-1 split and made it a lot more reasonably priced. So this one's getting a lot of activity on the option chain right now as well. Here's the 1-day look. You can see it does track about the 2 times. And then here's your 5-day look, your 1-month look, and of course your 6-month look. And there again, let's go ahead and look at a year. Things really start getting crazy at a year. And so this gives you a good idea of how this will work. Now you know how to compare your leveraged counterparts and then when to buy them and when to sell them. Now I'm going to try to make this easy for you. Feel free to take a screenshot of this. These are my favorite leveraged counterparts for the mother stock, and this may be a good way for you to go and make these trades yourself. Now, if you like this style of trading and you would like to do it, I would encourage you to make a list of your favorite stocks. Go ahead and outline the strike price that you'd be interested in doing this on your stock. Then set an alert. You can do it on your favorite app or even maybe TradingView. When you get the alert, then you go to the leverage counterpart and you place your buy. Remember, don't stay in these very long. It's usually just a quick in and out, and then you're good to go. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, a while back, I had made a similar video on how to effectively trade ETFs. The prices were a lot different then, but the concepts are the same. If you're interested in that video, I'm going to leave it for you right here.